Good morning, everybody, and thanks so much for joining us today for Q&A with Whitey. Feels like it's been a while since I've sat in this chair, and it has been. So I'm kind of hoping you've got your coffee together. I've made sure I've got my grumpy old man mug with me, and of course a bit of morning tea as usual, where my dear wife has prepared a very healthy chocolate brownie and a muesli bar of some sort. Oh yeah, we might get into those a bit later. But thanks again for joining us. Hope you enjoyed the last time we were together, which was almost a month ago now. Our state managers took over the show for me. Unfortunately, I've gone through a month of going into hospital for cancer surgery. And you're wondering why that's, well, you probably can see some of the scarring on my face. I've had 3 cancers successfully removed from there and another one on top of my chest, some 40 to 50 stitches later, and here we are today. That's a story for another day, though. We're not going to go into that now. And I have a video on that that'll be released shortly for those of you who are not faint of heart, and we'll have that conversation later. But anyhow, look, thanks so much for joining us today. This is going to be a really inspiring conversation. I'm really looking forward to it. But before we start, we better say thank you to some very special people that support us. And thank you to our sponsors, ALI, Bluestone, Suncorp, Finsure, On Deck, Prosper, Speedy, Lend, AAMC, Strive Financial, Insurance Advisor Net, Credit Fix Solutions, and Trailbook Loans. And I am going to make a special thank you to Suncorp Bank, who are our wellness sponsor for the FBAA, and who 2 weeks ago sponsored our Are You OK Day event, which was an enormous success. Some 665 brokers across the nation were registered for that. We're very honoured to have the Federal Minister for Health, Greg Hunt, do a presentation for us and show great support for the initiatives that we do in the mental wellness area within our industry. And it was a great day, and again, thank you to Suncorp for their support, and also to Renee Blethen, who emceed for me as I couldn't do it at the time. So thanks very much. Let's get on to our conversation this morning. I'd like to welcome our guests who are joining us. They are leading industry entrepreneurs. We have Huy Truong from ALI, John Kolenda from the Finsure Group, and Anthony Thomson from 86400. All people who are significant in their businesses, significant in what they do, and have had great successes. So gentlemen, welcome to all of you.
Thank you.
Thanks, Peter.
Here he is. Okay, gents. Thanks so much for taking time out of your days. I know how busy you all are and how valuable your time is. So from me to you personally, I just want to say thanks, because you've taken an hour out of your day and a bit more to prepare for this. And I'm very much appreciative of it, because this is a conversation I think will be extremely inspiring to brokers all around Australia who are watching right now, in regards to people who have achieved great success and the journey that it means to get there. And you know, sometimes we see and hear names that pop up and they go, wow, this person's achieved a lot. You don't know all the hard yards that have gone in to get to that point. And it's not necessarily smooth. For some it is, but for others it's an interesting journey. I think there's so much we can learn about what you gentlemen have been through to get to where you are today. And to start that, I want to take a slightly different tack and get to understand you a little bit better. So I'm going to ask each of you, and I'll run the circle on it, a little bit about your background, what you've come from in the past. Have you always been in the business you're today? So what's your background look like, and where it is it's taken you to your journey to get you to where you are today? We won't go to huge details. This will be a bit of a headline, and then I'll ask some more pointed questions as we go forward. And we've got some questions from our brokers that are watching as well, so I will filter those in as we go. Alrighty, so what I might do, Anthony, I might flick to you, Chairman of 86400. How honoured are we? So thank you for your time. Do you want to give us a bit of a background, AT, on your journey to get to where you are today as a person?
I'd be delighted to, Whitey. Thank you so much, and thank you for having me. I am, as you might gather from my accent, not from around these parts. I grew up in Newcastle, the cold and wet and miserable one in the northeast of England, not the nice one up the coast here. I'm a marketer by background. So for me, everything starts with what's the customer problem we're trying to solve. I've applied that to everything that I've done in my life. About 1 million years ago, I built a marketing services group, which became the biggest in Europe, which I sold to Publicis. The second largest ad agency group in the world. I had this rather bizarre idea back in the mid-2000s to start a new bank in the UK. First high street bank for over 150 years, called Metro Bank. Grew from 2 people to 3,500 people, $5.5 billion market cap. It became clear to me in 2012 that the future of banking was digital in general and mobile in particular. So I founded and chaired the first mobile bank in the UK, first in Europe, called Atom Bank. That's got a market cap of about $1 billion today. And about 2 years ago, my wife and I moved to Sydney for purely lifestyle reasons. And I was invited to chair and co-found 86400, which is the first smart bank here in Australia designed to help Australians take control of their money.
That's a really interesting point. The amount of people I hear at a certain time in their lives to say, I've gone for lifestyle or semi-retirement, and also you go, yeah, this is full on. Yeah, this is semi-retirement. And I think for some of us, it's one of those paths and journey that you may never get to the end to. There's always the next thing somewhere. That's fascinating, Anthony. Thank you for that. JK, I might flick to you. Tell us, you've got, and I know a bit about your background, but give us a little bit about the JK history, my friend.
Some of the stuff you might know about. So while I was going to university, I actually did a whole lot of interesting work, which wasn't really, anything great. I was a brickies labourer. I worked as a night packer in a Woolworths. I made hydrochloric acid, sulfuric acid in a factory. So I did a whole raft of really little jobs while I was going to university. My first real job was actually selling property. So I used to sell residential properties. See, in my history, I've had two real employers. One was the property developer for 7.5 years. And then I was grateful for the opportunity to start with John Simon in this is dating back a few years now, 1994, I started off as a broker and spent 10 years at Aussie Home Loans with John. Thoroughly love that. And then since then, I've started 2 aggregation businesses, X-Inc and Finsure. So that's probably a good oversight.
Yeah, and now you're right. I have learned, and I'd almost forgotten about X-Inc. Now you mentioned it. Mate, there's an interesting journey from day one to go from that beginning to land where you are now. Very interesting. Hugh.
Yeah. Life's a journey.
Like it certainly is. Not always smooth either, but that's okay.
No.
Hugh.
Thanks for having me, Peter, and terrific to hear some of these other stories. Well, I guess I started my entrepreneurial journey really back in 1998. I just sort of come back from America from a couple of years studying over there and saw the origins of the .com version #1, and was determined to try and do something back in Australia. My career up until then had been with a management consulting firm called Boston Consulting Group, and so from there we started one of Australia's larger initial online shopping businesses, a business called wishlist.com, which I ultimately sold to Qantas many years later. But that lesson, that venture taught me lots of things about, how to start a business, about timing. We're now sort of 20 years later seeing online shopping really start to mature, particularly kicked along with the pandemic. And so much of it's around timing and some luck. So since then, it's also been around been involved with building materials, transport and logistics, and then my latest venture, obviously, with ALI, investing back into ALI back in 2009, and have either chaired it or run it since that time, and really enjoying getting into the world of insurance, and particularly I guess it's a noble purpose of being able to make a difference to people's lives. So lots of entrepreneurial experiences up and down. but certainly there's some few lessons that I think I'm sure we'll get to through the course of this discussion to really highlight. Probably the only other I'll mention, Peter, is you know, I came to Australia when I was 7 as one of the first boat refugees arrivals from Vietnam, or sort of in the post that war, and that's also led to getting more involved into socialpreneurship. So how do you take the notion of being an entrepreneur but applying it to solving, you know, social and community challenges, and that's been a real joy and honour to be involved in that of late.
So whilst we're talking about it, do you want to just tell us a bit more about that? And we might as well just continue that conversation just a little bit further.
About 3 years ago, I co-started an organisation called Thrive Refugee Enterprise, and basically we provide funding and support to refugees and asylum seekers to start businesses. And in the last 3 years, we've now funded over 200 and helped write about 1,200 business plans. So it's about financial literacy and giving people, even though some of those plans haven't come to fruition yet, over the course of the next 5 years, I'm sure we will see many of them. And we're now engaging corporate sector, government, and a shout out to Westpac, who've been our terrific funding partner through that. So it's about how do you take this notion of entrepreneurship but applying it to community and public issues.
Mate, that's fantastic. What a great naval initiative that is. That is very inspiring.
Very rewarding.
Yeah, I was going to ask you about ALI next. I don't want to now. I'm stuck at this point. I think it's fantastic. We might come back to the ALI
in the course of the discussion.
I think that's such a great issue to address, because, you know, I remember back in the 60s, Milton Friedman said the only purpose of business was to make money. And I'm a firm believer that social purpose is inherent in the fabric of businesses. I believe passionately that profit is a byproduct of doing something well for the customer. So if you give the customer a better product, or a better service, or a better experience, and you run your business well, you will be profitable. But profit should not be the purpose of businesses. So I have great admiration for what you just described.
Anthony, have you had any journeys along that path, whether it be charitable undertakings or socialpreneurship, or have they things that have travelled on your path in your journey?
Yeah, and it's something I've looked at very closely. I wrote a book, I co-authored a book about 2 years ago on the marketing of money. And the basic conceit of it was, and again, it's to a point that I think Hugh made a little earlier, which is where financial services started. Much of it was in the mutual sector. You know, the original providers of home loans, the building societies as they were in the UK, were temporary building societies. Half a dozen people would come together, all put some money together to buy the first person a home. They would then pay off their mortgage. Then the second person would buy a home. And when all 6 had bought a home, they stopped doing it. And then that moved to be the permanent building societies providing mortgages. Insurance, you know, started out with widows and orphans, protecting them in when the breadwinner, which in those days was invariably male, died. So our industry, I think, started out having a great social purpose. And I think somewhere along the way, a lot of businesses have lost sight of that. And back to my previous point, they just think they exist to make money. They've lost sight of the customer.
I'm so tempted to make another comment that I know I shouldn't about certain other institutions somewhere else in this country, but I'm going to leave it right alone. JK, what are your thoughts around all that?
Look, we've been blessed, you know, from a family perspective. I was involved with my wife and her 2 girlfriends who set up a charity called Dreams to Live For. The 3 ladies had a very dear friend who was, you know, riddled with cancer and had one wish. And that's what sort of set up the Dreams to Live For. So we found that, well, her wish was quite simple. She wanted to get on stage with a band. So we were able to orchestrate human nature I think it was on a Wollongong tour that she got up on stage and sang 3 or 4 songs. And that sort of helped us, you know, with the initiative to get something up to help support people who are older, but with limited time, you know, with cancer and a whole lot of a host of other things that are dying, to make their last wish come true. So Finsure is a big supporter of Dreams to Live For. And, you know, it's quite amazing what we found. And, you know, I've met a couple of the people we've supported. I remember the second lady we granted a wish for, and it was all she wanted to do was actually go to dinner with the 2 hosts of an ABC radio show that she'd listened to for 20 years. And, you know, it was really inexpensive. We rang the hosts. They were more than willing to come and have dinner with her. We rang a restaurant. They kindly donated the meal. We had a chauffeur driver pick her up and drop her off. We put her up at hotel accommodation. We rang all those suppliers, and it didn't cost us anything. So we support the Dreams to Live For Foundation, and it's still going. It's now, I think, got quite a lot of traction, and he's part of the St. Vincent's Hospital group.
You gentlemen are fantastic. Yeah, it's interesting on these journeys, and some of you may or may not know, JK, you will, but my stepdaughter has special needs, so my wife and I have actually, from the journeys of mental health through all that, set up our foundation called the Sanity Space Foundation to help parents and carers of special needs kids. Targeted at the parents, not the kids. The kids get a lot of stuff, but to help them with their mental health and the challenges they have, because we see it firsthand within our family how that impacts. And I think that it is a reflection of people's true passion and commitment to the industry that they're in. It's not, and I speak on this at time to time, but it's not a job, it's not a career, it's actually your life's journey. And this is a direct reflection of who you are as people. And I don't think people see that enough. They see all the glory and the success. Here is a side that is very, very impressive as to where people stand on this, because the journey is not always easy. And Anthony, I might flick back to you and say, well, you know, has it been an easy journey? What, and if not, what are some of the challenges that have come, without necessarily going into, you know, huge detail? But, you know, some people just see the glory and the limelights and the success, don't see what actually happens to get to that point.
Yeah, I don't know whether I'm smiling or grimacing when I'm putting my answer together to that one. And it's a really great point, Whitey, because I try to speak to schools and to colleges and to young entrepreneurs. I always get asked, as I'm sure Hugh and John do, the same question, which is, you know, what's the secret of your success? And I've said many times, you know, if there is a secret to any modicum of success I've had, it's that I get up in the morning and I go to work. And they go, well, doesn't sound like much of a secret. Well, let me tell you a brief story. Back in 2008, when we were trying to raise the money for Metro Bank, banks are pretty expensive businesses to start. You know, you need a lot of capital. We needed $100 million. And we couldn't get any traction in the UK, so we went to America to try and raise the money. And I'm sure you guys have all done it. You do road shows, you do 8 meetings in a day, 5 days a week. We started in Baltimore, then we were in Connecticut, then we were in Philadelphia, then we were in New York, then we were in Boston, and, you know, backwards and forwards. And at the end of 3 weeks, we had commitments to $116 million. So looking for 100, we had commitments to $116 million. I was living in the UK at the time. I flew home on the Friday night. I got a free upgrade, which never happened since. I was sitting there drinking a glass of champagne thinking, you know, we've done this. We're going to launch this bank. And my joke is I got home to the UK on the Saturday morning. I told my wife and she went out to spend the money. And then on the Monday morning, Lehman Brothers went broke. And between Monday and the Friday of that $116 million, $65 million disappeared. Within 3 weeks, all the money had disappeared. Some of the companies who promised the money disappeared, in that 3-week period. And you know, it would have been really easy just to go, oh, it's just all too difficult. It's not going to happen. You know, fate's against us. But you know, I got out of bed and I went to work and I kept doing that. And a year later, we were able to raise the money, and the rest, as they say, was history. So you know, it's not easy. I don't think I'm particularly talented. I don't think I'm particularly insightful, but I do get out of bed in the mornings.
Yeah, it's interesting. When I was younger, much younger than what I am now, I learned and then taught martial arts, a full contact style. And we used to have what was called a black gi training. And basically the sensei beat the shit out of you until you couldn't stand up. But it was all about taking the hard knocks and being able to stand up again, even when you felt the world had collapsed around you. And I know people that had broken bones that have been through this and got up again and kept going. Now it gets a little bit messy there, but the principle of is that it's, I was going to say the school of hard knocks, but the reality is when you get knocked down, regardless of how hard it is, regardless of how bad it is, you got to be able to stand back up and keep going. JK, what's your experience been like?
Fine. Look, it's grown over the years. I have a problem with a couple of things. One is I tend to bite off more than I can chew. So I put myself into predicaments where I find that I have to deal with more, I have to cope with more, there's more stress, you know, I've got to work harder. And that elasticity is sort of got bigger and bigger. So I ended up biting more and more. So over the years, as I sort of started, you know, with smaller things, and, you know, I thought I could do a whole lot more. I always bit off more than I could chew. And then I was sort of backpedaling, trying to make sure I succeeded. And then what it's taught me is over the years, like there is no limit to the elasticity or how far you can push yourself. And I think the greatest lessons I've learned has been with the greatest challenges. So over the years, I've just sort of expanded that challenge and, you know, the sort of scope of what I believe to be achievable only through sheer success of, you know, getting on smaller bites, and then it just sort of compounded on itself.
Yeah, I hope my chairman's not going to be listening today, because this next comment he might take up on me, but I've always loved it when I've had my back against the wall and the odds were completely against me. I tend to push back 10 times harder than I'm being thrusted backwards. And partly why I got in the FBAA, it was the underdog. And I love that. Getting in there, mixing it up, but the harder somebody pushes against me, I come back 10 times harder. And if that pressure's not there, as you're talking about, okay, I actually underperform. Don't tell my chairman. Yeah. Right? Promise, each of you. And the hundreds of people that are listening. Nobody say it. But yeah, so that pressure point, I think, is a very good point. Hugh, how have you found things?
I find being an entrepreneur exhilarating, incredibly motivating, but also incredibly challenging at times. And you have to be comfortable with failure. Whether at an enterprise level or you know, or a project level or whatever it might be, and back yourself to be able to, you know, as Anthony mentioned, just dust yourself off and get back on the horse and keep riding. You know, if I go back to that first venture of the online shopping, you know, that taught me a lot about the size of the opportunity. As an entrepreneur, you often think the opportunity or the demand at that point in time is an order of magnitude perhaps larger than what it currently is. And so we built this great online shopping mall, effectively a shopping center, but you know, the pipes weren't there, the roads weren't built. You know, Telstra said they were going to have, you know, sort of 4 million households on broadband by the year 2000, and I think we got to that number something like 15 years later. So you need a lot going your way for it to work. The capital markets were, you know, we raised $25 million to do that, and then but the plan probably ultimately required about 50 million. And when the NASDAQ crashed in 2000, everything fell away, and so you had to completely reinvent the business to something else that was less capital intensive. So you live through those ups and downs. But probably the thing that you know, like Anthony mentioned earlier, we often get asked questions about what being an entrepreneur is like and what the recipe looks like. Probably the thing that I would say but that's been most important to me and to many entrepreneurs that I speak to is that what problem are you solving, right? Forget about the profits, forget about what it takes to solve it, but initially, what is the problem you're solving? You know, whether in a commercial sense or in a social sense, as we spoke about earlier. You know, how important is that problem? How big is that problem? And really importantly, are you willing to invest years and years of your life in solving that problem, right? And if you can get a sense of, and you know, some comfort around that, then you earn the right to start working out what the solution looks like and trying to bring stakeholders into it, whether it be capital providers, team members, you know, customers, whatever, to help solve that problem. But I find that not enough people think about that. What's the problem? How big is it? How important is it? Are they willing to invest their life into it? Whereas they tend to start at the other end, which is how wealthy do I want to be at what point in the future, right? And I think that we need to, you know, every entrepreneur really needs to think some time about that.
Yeah, I think that is so. Sorry, Anthony, you go.
I think we're both going to say the same thing. Is just 100% agree with that. And just to, if I may just add a couple of things to that, which is, I'm sure like my colleagues here, I invest in some other businesses, and I look at a lot of business plans. And the first thing I look at is, what is the problem that you're trying to solve? And so many people I see in business plans are trying to solve a problem that nobody's got. So, you know, you may have the best app for goldfish babysitting, but I don't think the market's really that big for it. So is there genuinely a problem that you're solving? And then the second part, and I'd appreciate Huy and John's views on this, because it's something I see a lot, is people have solutions to problems, but people aren't prepared to pay for those solutions. And it's really a two-parter. Are you solving a customer problem? And is the customer willing to pay for that solution?
So to you, JK.
I actually look at the fundamentals in the same way when I invest. I mean, I invest in quite a lot of businesses, like a lot of you guys. However, I've made a whole lot of mistakes and, you know, in a lot of things, but, you know, I set up Finsure with actually a totally different mindset. I actually am very passionate about the industry. I've been in it for nearly 30 years. And to be honest, had I went, and I did go to a lot of people and say, back this business, I want to set up Finsure, I mean, it just did not make sense at all. And the only reason I did it is because I'm really passionate about the industry. My intent was actually always make a positive difference to the industry, because it's something, it's given me a lot. I want to give something back. I understand the industry really, really well. I mean, having spent a lot of time in UK, US, Canada, understood the markets. So when I set up Finsure, just under 9 years ago, the roadshow would have been to investors. I'm going into a market that is highly competitive. The barriers to entry are very high, and the margins are very skinny, and it's going to cost $10 or $20 million to build, with no value proposition or point of differentiation in the market. I mean, that's just the worst plan I could ever. I wouldn't back that business if you presented it to me. So I did it primarily because I really love the industry, and I think testimony to if you're really passionate about something and you love it, that is also a key ingredient for success. And on the commercial sense, yeah, I think you look at a whole lot of different fundamentals when you're actually investing and looking at businesses. So I'm a serial startup junkie, which is another one of my flaws. So I've lost a lot of money and made a lot of money, but out of each and every experience, I start to learn a little bit more and get more insights into probably formulating a more accurate view of what will work and what won't work. So, I mean, and hindsight's a wonderful thing as well.
I think that gains to, you know, that not just the experience, but that accumulated wealth of knowledge that as we get older in our journeys, the decisions we make are more informed based on not just the successes, but in my view, I believe more so from the failures.
Failures.
Yeah, the failures to me are the things that have taught me the most. to help me progress in what I do, and that view that nothing happens overnight. Things take a long time to build and develop, and that's where you have these successes and failures along the way, and that's where you've got to be able to stand back up again and keep going. Yes, you.
I was going to say, I would draw a distinction between investor and entrepreneur owner, for example. As an investor, I think as we all do, you can believe in the business plan, you can believe in the team, but if it doesn't go well, it doesn't go right, and you lose your money, you walk away and you're on to the next thing. Whereas, and it's somewhat of a financial transaction, perhaps a little bit more, but still a financial transaction. Whereas when you're the entrepreneur inside the business or starting the business, you're fully vested. It's that saying between the bacon and the egg. You can't readily walk away because your team's there, your customers there, your own reputation. So I think as an entrepreneur, it comes with a whole host of other, I guess, embedded pressure and commitment that as an investor, I think you can still learn a lot of things by investing. But that idea of Anthony said earlier about you have to get up in the morning and face the troops again the next day is something.
Is there something in your experiences, and I'll ask each of you, but I'll stay with you for the moment, Hugh. Have you seen like a percentage hit rate in all this, like a percentage failures to successes? So out of every 10 businesses looked at, 10% work and 90% don't? Is it? And I'm not saying that's a number, but is there any sort of thing?
As an entrepreneur?
Either way.
Well,
however you look at it, because to me, it's having a go.
Yeah, sure. I guess as an investor, it depends on sort of which, sort of stage of the investment profile you're at. In startups, you'd be lucky to have maybe 2 or 3 surviving out of 10. In more mature investments, then obviously the probability is much higher. As an entrepreneur, if you're starting a business, sort of most of my friends from business school are all technology entrepreneurs in the States, and pretty much without exception, I'm pretty much all of them have been involved in one startup or another that didn't pan out, right? But then their subsequent ones have. So it's not a perfect science being an entrepreneur. You can, that cocktail of how big is the problem, are consumers or customers willing to pay for it, and even if that was satisfied, have you pulled together the right team to execute on it? Is the market and the capital timing right and in your favor, or is there something that's just about to happen that will knock the plan way off course? So there's so many pieces that need to go right, which is why there's this sense of commitment and longevity to see it through is so critical, because you've got to be able to ride through the trough to get through the other side.
Great points, JK. What have you found that sort of percentage? Yeah, and I know it's theoretical as such, but I would imagine you guys see lots of opportunities, and many of them fail, and only a certain number succeed.
I'm an oddball again. The only reason I say that is I'm a tenacious, persistent bugger, whatever I get involved with. And an example is I invested in a business 25 years ago, a coffee business that's pretty well established now. It's actually in Melbourne. It's called Veneziano. And I was one of the founders. To be honest with you, I lost money for 20 years. And the thing is, yeah, we could have shut it down after 1 or 2 years, after 5 years, after 10 years, we could have shut it down. I think during the course of it, you do make decisions, where you can actually exit and wind it down. However, for some reason, I don't seem to be able to give up. I'll make changes. So I'll change a management team, the amount of problems I've encountered are hundreds. And so there was a whole lot of changes over 20 years. And I do tend to take a little bit of a long-term view on stuff, provided I fundamentally get in and believe in it, believe in the people that are in it. And then unfortunately, in that one, some of the people involved weren't the right people, so I had to make some changes and get some new shareholders that were actually engaged and had skin in the game. But I think most businesses, if they have a fundamental and it's the right people in it, a lot of mistakes where businesses fail is the wrong CEO or the wrong people in it. If they're wrong, get rid of them, get someone else in. And that rule of thumb, you know, it always takes you 3 times longer and costs you 3 times more. That's true, 100%. Every business I've set up, I've budgeted for, you know, 7 million, the thing cost 18 million or 21 million. Everything takes you 3 times longer and costs you 3 times more, no matter how well you know that business intimately. Then it's about tenacity and whether or not you want to keep going or pull the plug. And they're just commercial decisions. So I think commercial investors have a more clinical view, whereas I'm one of those naive individuals who just keeps going and thinking, mate, this will come out the other end. Touch wood. All of them have so.
Excellent. Anthony, same to you.
Whitey, you were absolutely spot on with your statistic. All the data tell us that out of, and this is globally, out of 10 new startups, 7 will fail, 2 will kind of meander along, do okay, and 1 will punch the lights out. And the thing about that, which is interesting, and I think entrepreneurs often miss, is that if somebody's going to invest in your business, it's got to have the ability to have that 10x effect to really punch the lights out in terms of its performance, because most investors know that 7 of their other 10 investments are going to fail. And one of the challenges I've seen in business plans, and I'd be interested in Hugh's and John's view, is that you look at a plan, you go, yeah, I quite like this plan. There's a problem that they're solving. I quite like the team that are doing it. But the scale of the business is not sufficient to justify the investment in it. It really needs to be able to outperform to justify the investment. And I've seen this represented. I talk to a lot of VCs, private equity guys, and it's not just do they think the business is a good idea, it's do they think it'll make them enough money to make up for the ones that they fail in.
Yeah, excellent. Excellent. Hey, what I want to do, guys, is to jump across and I better answer some questions that have come through for the people who are watching us today. One question here that I think is quite interesting that says, where do you think the pandemic is taking the finance industry to? Anthony, you got a thought around that? I know it's out of the blue. Where do you think the pandemic is taking the finance industry to?
There's a great pundit on the financial services industry called Chris Skinner. And Chris's view is that we have to prepare our businesses on the basis that COVID is here forever. I think what's underpinning that is, you know, COVID will of course go away, but then there'll be something else, and then there'll be something else. So we've got to be of the mindset that says this is the new normal. We'll go back to the old normal, and then this will occur again in some other way.
Yeah. JK, what's your thoughts on the pandemic that's taking the industry?
I absolutely love this industry, and the reason is because brokers are the most phenomenal people I've ever met. And I have a lot of businesses, a lot of different sales businesses. What I like about it is the way they were able to actually adjust over a period of 4 to 6 weeks in a lockdown situation to go from thinking, I need to do a face-to-face to actually doing everything online. I mean, we as an organization had record settlements for May, June and July, and that was because of the adaptability of our brokers. They're very quick to adapt. They've been actually in a cycle where they've had everything bombarded at them for the last couple of years, the Hain Commission, the REM review, COVID, and they're always facing assessment criteria changing and evolving every couple of weeks, whatever. So I think they were actually quite adaptable and move very quickly, and which has actually shown right across the board for most aggregators just how agile, diverse, persistent brokers are. And I think the fundamental driver behind a lot of that is because they really care about delivering to the people they engage with, their customers. Because they're forced to sit at home, it's meant that they now do it over the phone or via Zoom. They've adapted very quickly. I think it's actually put the industry in a much better position, and we'll probably start to see broker market share increase more rapidly because the complexities of lending are now far worse than what they were 6 months ago, but they've also adapted to the new environment, which is that COVID situation, which has put them into. I mean, especially the poor guys in Victoria have been locked down for a lot longer than everyone else. They're still doing business. So
yeah. I couldn't agree more, mate. Couldn't agree more. Hugh?
I think the brokers, as JK outlined very clearly, will do really well and win a bigger share. My concern is about the pie shrinking. Australia in particularly has traditionally been very reliant on an extensive net immigration program. I think those borders will be closed now for at least another sort of 12 months. We're being benefited from a very low unemployment rate. Clearly, particularly in Victoria, that's starting to escalate. And so when you have, demand coming down, property prices, putting pressure on property prices, unemployment, etc., it just means that credit ultimately will have to respond to that. So I think the brokers get a bigger share of that pie, but the pie is shrinking. On a more perhaps self-oriented level with insurance, what we're seeing is that there is a greater awareness now of financial vulnerability. Our cancellation rates have gone down, our new business has gone up, despite all the challenges that are going on. When customers or consumers have been effectively, when you think about this generation of borrowers over the last 20 years, they haven't had to deal with the recession, they haven't had to deal with war, they haven't had to deal, and they've had the benefit of a very friendly China with incredibly open trade policies. All of that's changing, so which means that people's sense of financial security and vulnerability is starting to change, and we're seeing that in the form of personal risk insurance increasing.
Yeah, I think it's interesting how there are so many people who haven't been through something. I always chuckle to myself when people sort of go, so what was the GFC about? They didn't go through that. You sort of, you got to be kidding me, right? It seems to be always second nature. I kind of hope that the state premiers will open up borders a bit quicker than that, but I'm fairly confident there'll be some parameters and restrictions around it. The international borders will be more problematic for a while, I can see. I've got another question here that I think is really important for people to understand from yourselves how you go about this. And the question is, how do you carve out the time needed for self-care? How do you look after yourself, your physical health, your mental health? Where do you find the time with all that you do, with all that you're involved in? How do you find the time to carve out some time for self? Hugh, I'll stay with you. We'll go back around.
Well, to begin with, not surprisingly, there's quite a close correlation between my mental health and how the business and the market is going. So if the business is going well, I generally find I'm pretty happy. But leaving that aside, I've got a terrific family, three daughters, very close extended family, and then Thrive, as I mentioned before, getting back into that non-profit area. It's a really important part of my, overall well-being, the sense that I'm contributing back, the sense I'm actually perhaps broader than just a business venture, and then I'm pretty active exercise-wise, in terms of running and golfing and things like that. So so it is. You are there. Balls,
yeah, between the exercise, the mental health, family support. All contribute. JK, how do you find time for self? I know some of the things you probably get up to, and that'd be pretty cool. But, but you're a very busy man.
I'm probably a typical consumer. Since this COVID situation, I've adapted to having to work from home on Zoom and all that sort of stuff. But I went out and did what most consumers did. I went and bought a bike. Trying to get a bike nowadays is pretty hard if you're trying to buy one. I bought some gym equipment. So, and I'm walking virtually every day. It's nice with my wife. We're doing on average about 9.5 kilometers every day. So we're doing some fitness work. You know, I do some gym work with my son, and, you know, walk and then ride a bike. So, you know, I think it's been a little bit refreshing in the sense that you've had to adapt and change, and then how do you actually deal with that? And to some degree, I think it's been nice because I can spend more time with my family. I was actually heavily into working long hours, going in early, coming home late. It's freed up that concept of having to travel in and out of work, which I don't have to do. And then during the day, you know, I'll go for a walk with my wife, or we'll find a time during the course of the day. That sort of flexibility has been a little bit refreshing because, to be honest with you, I didn't walk in the past. I didn't ride a bike. So, and now I'm doing that, which is different.
Very positive outcome. Anthony?
Yeah, I think it's a really interesting question. And I think for me, the answer is physical and mental health isn't optional. It's something you absolutely have to do. The work-life balance is not just a saying, it's something that's absolutely critical. And what I've seen, and I think it goes to a point Hugh made earlier about entrepreneurs, is they tend to be incredibly passionate. They tend to get incredibly emotionally invested in what they're doing, and they work longer hours. They're just more committed, which is, of course, what helps them succeed in the short to medium term. But in the long term, you need to have that balance. And I think we all have these huge ups and downs in our business lives, well, in our personal lives as well, but particularly in our business lives. And I think it's really important to remember, and sometimes I have to force it upon myself to say, you know, this day will pass. It may have been a really shitty day, but it'll pass. You know, I've said it in business, we've had good days, we've had bad days, we've had good weeks, we've had bad weeks, we've had good months, we've had bad months, we've had good years, we've had bad years. And you just got to keep going and treat those two imposters of success and failure equally.
I think it is part and parcel too with this, with COVID, is that work-life balance that, in my mind, basically forced us all to do it. JK, you were saying you weren't riding bikes and going for a walk. Now you are. And it's the unintended consequence of something quite bad that actually draws out positive outcomes. I mean, I'm in the same boat. I used to do about 220 domestic flights every year, year in, year out. I always hit Qantas Platinum 1. It takes me 2 months to qualify for Platinum with Virgin. Yeah, it's just stupid. We hit COVID, stopped dead. And a lot of people said, so has the wife booted you out yet? You got the shits with you being at home all the time? No. Got on the treadmill, lost 4 kilos. I could do with losing a bit more, but it was a certain start. I'm type 2 diabetes. I was struggling prior to the pandemic to get my sugar levels right. They are now brilliantly perfect, day in, day out. And it's those forced change lifestyles, I think, that actually are some pretty impressive things that we've had to do because of. And of course, JK, as you said, you don't have that time lag between getting to the office, getting back again. You have more time for family. And I think there's a lot of things like that mentally and in physical sense have done a lot of good for us all to be forced down that wedge. Hey, Anthony, I've got a question that's tagged straight at you. A question that's been asked, and this is a legitimate question: are digital banks a good investment?
I guess I would turn that around and say, would anybody in their right mind invest in a bank that wasn't digital? Because the future of banking is digital in general and mobile in particular. Everybody sees that. I think the challenge that the big banks have is how do they take legacy IT systems, legacy real estate, a lot of legacy issues in their culture, and transform them into digital businesses. And the challenge that new digital businesses have is they've got none of that legacy, but they don't have that consumer relationship, that consumer trust. So I think my short answer to your question is the future of banking is digital. You just got to choose your bets wisely.
I think, yeah, I agree. And I think you mentioned legacy systems, and I think that's a significantly serious challenge for major banks to be able to try and get past that. And I have, and I will ask the same of the.
I was just going to say that very quickly. No, sorry, after you.
I have a question that's come through that I'm pretty sure I know the answer to this, but it says, what is the history of the name 86400? It's just come through on my phone. That's the number of seconds in a day, isn't it?
Exactly right. We had a planning day way before the bank started, and we're saying, you know, what's our purpose? Our purpose is to help Australians take control of their money every second of every minute of every day. And one of our engineers said, 86400. We went, what's that? He said, number of seconds in the day. And it was just absolutely perfect.
I agree. I love how brands and names are created, that sort of brainstorming and things that just pop out of the box. I think are fantastic. Excellent. Well, there you go. We
had a similar one, Pete. You're going to have a laugh at. When we were rebranding Goldfields Money, we were with the marketing team and some really smart minds, and they came up with BNK Bank, and they said the bank without the asshole in it. So it sort of stuck with us.
I didn't know, and I love that. That is brilliant. And
I don't know whether I'm supposed to say that.
Oh, that's fine. You get away with anything here. It's all right. Oh dear. Again, another line I'd like to take in many different directions. I'm just going to let it go. Oh, well done, Jack. Hey, let's finish off this question. Digital bank's a good investment. You got a thought on that, Jack? Obviously, you guys have a strategy in play of some degree.
Look, I have a whole lot of concerns in as far as a whole lot of the digital valuations that are currently at play, both here and internationally.
Yeah.
You know, some of them just don't add up. You know, and they don't make sense to me. The thing with any new bank is the fact that how is it going to access distribution? The number one fact, which is a reality, and I'm not sure whether all the neo banks understand this, the cost to lead to settlement on a B2C is unprofitable. You cannot make money. And how do you tap into distribution? Unless you've got a massive pool of money behind you, you'd have to question some of the long-term viability. I mean, that's a question mark I have. I mean, you can keep raising capital, but it is one of the challenges in as far as digitization. The thing is, to just compete, you have to have an app, and you've got to have something that competes against your rivals as a minimum benchmark. And there are some banks who've got some really sophisticated consumer applications that most customers are quite comfortable with. So, you know, they're just some of the things. You know, there's a lot of question marks, and we'll have to wait to see what happens. I mean, the natural course of evolution is some will survive, some won't.
Yeah, it's got to go there. Like you look at the journey of banking in Australia, it's just its natural trajectory to get there, in my view, anyhow. Hugh, what are your thoughts? And look, I'm not trying to pick on digital banks as such, but just that investment.
I think this is analogous to the conversation and the discussion that was had back in the late 90s, early 2000s between pure online retailers versus existing retailers like, you know, Walmart versus Amazon. You know, and in my mind, it's a discussion around culture and innovation, right? Because digital is going to be a part of all our businesses one way or another. So it's not like it's, you know, horse and carts versus cars. You know, everyone's going to have an digital engine and a role in digital in some way. The question is the legacy branch network and the legacy systems of the traditional banks going to hold them back to be able to innovate and drive? You know, CBA is now trying to compete with Afterpay with its investment. So that's an example of one where can it turn its existing footprint into a competitive advantage? So that,
hasn't Afterpay shareholding gone through the roof quickly through COVID?
yeah. So you know, so it's as with any industry, it comes down to you know, sort of that particular plan, that team. You know, because there'll be some great digital banks and great digital businesses, and there'll be some really crappy ones. And you've just got to be able to navigate and know what you're looking for, as opposed to investing in headlines.
Yeah, I hear you. Hey, look, I'm just about out of time. What I'd love to do, and Hugh, I'm going to stay with you on this, is what word of advice and encouragement would you give for the hundreds of brokers around Australia who are watching this at this time? What's a piece of advice or encouragement you would give them? And we'll close off on this.
You know, thanks, Pete. Most of the brokers are entrepreneurs, right? Because they're self-employed. If they don't get up and write that loan or insure that client or whatever it is, they're just not going to get paid. So you know, they're like us in many respects. So my advice to them would be that if you believe in what you're doing and you're good at it, then hang in there and you'll benefit, right? And take this opportunity to re-look at your business and the way you set up to see whether you will are set up to grow for the future. If I think about what we do, you know, I believe in our noble purpose of insurance, of protecting clients and making a financial difference. But then it's about our systems, our processes. Have we got the right team in place? Are we investing in the right marketing programs? Have we got the right product? So they're the things that you can do right now, whilst the market might be a bit slower, to set yourself up for the opportunities that will inevitably come. So look at this. Don't look at this as a time of frustration and despair. Look at it as a time to reset, and if to tighten up on any areas that you need to tighten up on, then do that, and so that you can benefit from when the wave arrives.
Fantastic. JK, words of advice or encouragement from you, sir?
Yeah, look, I think sometimes we try and overcomplicate mortgage broking. The fundamentals are, you need to do the activity, yeah? So I think being in a positive state of mind it becomes like the foundation to do things, yeah? So try and stay positive. If you're not, you know, talk to other colleagues and that to help you get back on track. Because in a positive state of mind, there's always opportunities that get created. Through the sheer fact of activity, you will start to build, you know, your pipeline and that sort of stuff, engaging with customers. And then the other one is learn from your mistakes. Like, the thing is, there's a whole lot of variables, which makes this game very complex. However, if you're able to learn from each and every one of the mistakes and keep improving on it, you start to reduce your likelihood of errors and mistakes. And therefore you improve your processes and efficiencies to become better at what you do. I mean, they're the three probably fundamental things, and most of those lead to, you know, really good long-term success for brokers.
Fantastic. Anthony?
Yeah, I think most of it was covered very eloquently by Hugh and John. I'd just say, you know, I've worked with thousands of brokers in the UK. They are entrepreneurial, they're very resilient. Never lose sight of the fact that you are helping people with probably the most important decision they'll ever make in their life, which is around their home. And to echo John's words, you know, tough times at the moment. Surround yourself with like-minded people, either through the FBAA or other brokers or other people, mentors who can just help you keep on top of your game for when things come back.
Yeah.
And look, we are out of time, but I've just had a question come through. A very quick yes or no. Anthony, do you have a mentor?
I did have, sadly, he died.
Okay. JK?
Yes.
Yes, no? Got a mentor? Yeah. Hugh?
No.
No, not at the moment, but you have had in the past?
Yes.
Yeah, I think we all have. Gentlemen, such an impressive conversation. Again, I thank you so much for giving up your time to be with us today. I know how valuable it is, and I know how scarce it is to find an hour in a day. Thanks so much, and I look forward to chatting to all of you again in the future. I'm sure everybody has learned so much from your words of wisdom and your thoughts on today's conversation. Thanks, and I'll look forward to see you soon.
Thank you so much.
Bye, everyone.
Thanks, everyone.
Hey, guys. All righty. How good was our conversation? And I'm sorry, there were a couple of other questions that came through. and we weren't able to get to them, and it's one of those things, we do have a time constraint. All right, now coming up next week, and we'll wait for JK to turn his camera off. Go for it, JK. There we go. We're going to talk to a man who I've known for a very long time, and in my personal view, I think is one of, if not the most intelligent men in our industry, to the point he's at that Einstein area. Yeah, borders on a bit of craziness, but just incredible high intellect. So we're going to be talking to a dear friend of mine, Mr. Kim Dalton, who is currently the Managing Director of Australian Mortgage Marketplace. We're going to be talking about, you're right, tattoos, tips, and tricks for the future. He is a futurist in his own right, and we're going to have an interesting conversation there. And we're going to tackle the question of clawbacks. I'm going to put it front and center. There's media on it today, on Thursday. You'll see all that, but we're going to talk and we're going to drill out and deep dive the conversation on clawbacks. All right. Well, thanks for joining us, and a special thank you to our sponsors who have been with us again for supporting us on our journey. And remember, you will get a small survey after this. Please just click on the survey and do it for us. It's a big help for us to gauge how things are going. You got an hour CPDs for today, and I look forward to seeing you again on Thursday, the 8th of October in 2 weeks' time. In the meantime, stay well, take care, and I'll see you then. Bye for now.